Right, so back with closing trades, flat now, completely flattened out, 6702 for the Nifty. The mid caps are probably 0.5% in the green, but nothing to write home about. Couple of minutes away from 255, and we take trading ideas from Ashwini and Mitesh. But let's first get in an initial word from Dilip Bhat, joint MD of Prabhudas Lilladher. He joins us right now on the show. Really good having you, Dilip Bhat. Thanks so much for joining in. How are you positioning yourself ahead of two key events? I'm saying two key events because I think the exit polls will also have quite a bit of a flutter. How are you positioning yourself for trade?
Neeraj, I think how I look at the market is that the initial run-up has happened quite a bit, and I think that really caught a lot of people unaware, and that was largely led by the FIIs. And I think now what is possibly left is, as what you said, the second event, that is the first event, that is the exit poll, which is likely to come around 12th and post that. So I think that's another time when the moment is going to come. But my own take is that ahead of this big event of May 16th, with so much run-up that has already taken place and market is simply much ahead of the fundamentals, I would really like to trade a lot of caution. I would like to book some profit, stay about 30-35% in cash, and then wait for the event to happen as what the market thinks. So if that happens, then I think you'll still get an opportunity to invest, even if that event happens favorably as what all of us think. And I think because after that you'll still have 1.5 months to the budget, and when once again the expectations will run sky high and markets will remain at elevated levels. So I would rather play for that second level of rise rather than continue with the markets from the current level. So I would like to be a little more cautious and try to play a little more on the safer side.
Okay, Dilip, we'll just come back to you in a second. Just need to get an idea at 255 from both our guests, but stay on with us. Come to you, Mitesh and Ashwini. Let me start with Ashwini first. Ashwini, what recommendation would you give out? Strategies at 255?
Index is doing the best of the lot, better than IT and pharma. So I think Z is a buy with a stop of 265 and look for targets of 283.
Mitesh, what about you?
I would suggest selling into Hindustan Zinc. I think metals clearly are the weak back. Sell with a stop at about 129 and look for targets of around 120 over here.
Okay, those are a couple of trading ideas. Watch out, Hindustan Zinc 2.5% down in line with the metal pack, and we'll come to these specific points as well, Dilip. But you know, your point is well taken. Somewhere in the conversation you did mention that it may be prudent to play safe as well. My question is, a lot of people are positioning themselves for two different kind of pockets. One, with a stable government at the center, high beta cyclical plays. Two, with a stable government in the center, buy into PSUs, and that's picked up theme as well. What is your best play over the course of the next 2 to 6 months, assuming that we have a stable government in the center?
Well, assuming that there's going to be a stable government at the center, I think the first expectation is that the investments will start happening in India in a big way, and the multiplier impact of that will be felt down the line. So I think certainly the infra space and the capital goods space will possibly be the first area where a good amount of takeoff can possibly happen. And I think that also possibly will lead to a higher GDP, so the discretionary spending also possibly will happen. So I think somewhere around, followed by that, there will be something to look forward even in the auto sector. So I think my first preference would still be the construction and the capital goods segment. And then possibly I think the second play is something which, as and when we go forward, we probably will have a look at that, how it pans out. But my own worry is that even last time round, there were a lot of expectations. It didn't pan out the way everybody was thinking. Now to think that all these things will behave in that linear way, whether it is capital goods, whether it is PSUs, yes, I think the euphoria probably would take it to a certain level. But I think what we really need to also understand is that there are too many constraints around. It's not just India where we keep on introspecting endlessly and feel that maybe we can turn it around. It's actually the overall incremental environmental conditions around us, around the world, which is really also going to play an important role as to how much are we going to recover.
Okay, Dilip, I've just got a couple of corporates coming up, but you know, again, that point is taken. Just one quick word really on how would you position yourself for the PSUs, because they may well do good or bad irrespective of what's the nature of the government. I mean, HPB, PRC, a lot of people are pricing in gains. What's your view on the oil marketing companies in particular?
I'm a little more favorable towards the oil marketing companies now for a couple of reasons. Because as you're mark to marking the diesel prices and the fuel prices, I think the amount of money that they have to collect from the government to reduce that is one. And if you were to just see that the kind of turnover both these companies have, and even if the margin, which is now going around 0.75 or something, even if it were to travel to say to 1.25 or 1.5, which is what bare minimum that we can expect in this particular cycle, I think a lot of things can flow into the bottom line and possibly can improve the cash flow scenario considerably. So the oil marketing companies look to be a reasonably defensive, at the same time a good bet. At the same time, whether we are talking about GAIL, ONGC, I think all of them possibly also will classify as something where one should have a look at that.
Fair point, Dilip. In fact, stay on with us. A lot more earnings to discuss with you, and also the trend going forward from an investment perspective. But before that, let's hear out Ajit Gulabchand, the CMD, HCC, on earnings, his response and his outlook for the business.
See, basically as a construction service provider, you've got to understand the quarter has some relevance and not, because it's a much longer term contracts that we are engaged in and has sometimes a seasonal quality to the quarter. But having said that, what we are talking about, that the year has been, we have been able to notch up a marginally better turnover than last year, but the bigger achievements have been able to cut down the costs considerably and been able to raise and get the claims, which is the reason why we got into this difficulty to first place. So to that extent, we have been able to perform better, and as a result of that, we are able to cover our interest cost and have still a profit. We have positioned ourselves that such weather will continue for at least another year or two, and try to see that even with the modest increases in turnover every year, we should be able to achieve the same. And are focusing on monetization of assets and recovery of claims in order to reduce our debt burden. This is a simple strategy we have, and we are moving with great effort. It has been a lot of effort. It's been a very difficult year. However, what we are now seeing is a change of government, and which we think will bring a breath of fresh air. And if it has to achieve the growth rates that India was known for a few years ago, without which they would find it very difficult to contain the aspirations of the people on one side, and having actually told us how the previous government didn't perform on this count, they will take those measures in order to improve the atmosphere. However, even if they take those measures, it would take at least a year for all that to translate into construction projects. So we are geared up for a year or two more of a little rough weather like this, and but with a greater optimism of what is to come.
All right, so point taken. Now, could you give us a sense?
That's it. See greater optimism on what's to come. The stock is up 7% in the session. And get in one more voice on earnings. Firoz Shah Godrej, MD and CEO of Godrej Properties, joins us right now on the show. Firoz Shah, good having you. Thanks for joining in. Margins have been terribly disappointing this quarter, and expenses have gone up considerably this time as well. What are the major reasons for this happening?
Yeah, great to be with you. Actually, there's a fairly straightforward explanation for that. We had a very large amount of space that we sold in one of our older commercial projects called Godrej Waterside in the current quarter. And that actually is a loss-making project for us. It was actually one that we had very much wanted to monetize. So the fact that we have successfully monetized it is actually very good news for the company. But that has had the impact of in quarter bringing the margins down. If you actually remove that one project, our margins are substantially higher both year on year and quarter on quarter. So I think, all in all, we're very happy with how the quarter has gone, both in terms of the financial results, but also in some of the operating aspects.
Which are the major projects then that contribute to quarter four revenues?
So well, we had several projects that contributed to revenues. As I said, our project Godrej Waterside was one of the important ones, where we sold over 400,000 square feet in that project for a value of about 170 crore. So that was actually, as I mentioned, one of the key accomplishments of the quarter. We also had good sales in some of our new projects. So these don't account for revenue because we have to still get them to the revenue recognition threshold. But we launched some new projects here in Mumbai and in Bangalore, both of which received outstanding responses. So I think for the quarter, Godrej Properties actually has registered its highest ever single quarter sales. For the first time as a company, we had more than 1,000 crore worth of property sold in the quarter, which is a fantastic accomplishment, we think, given current market conditions. And we also had a lot of new projects getting added to the portfolio. So we had 4 new projects that we added in 4 different cities.
PAT has been boosted due to lower tax rate this time around, Firozsha. How do you expect tax rates going ahead?
I think we did have, the tax rates were slightly lower because we had sales, as I mentioned, in this project in Kolkata, which was not a profitable project. But I think, depending on which projects are contributing, we'll see tax rates stay in that kind of a range.
Could you give us an update on the BKC project?
The BKC project is doing very well. We sold another about 18,000 square feet worth a little under 50 crore in the fourth quarter. For the project as a whole now, we've exceeded our target and our guidance of sales, where we'd said we'd want to sell between 200 and 250,000 square feet. Since we launched that project in March of last year, we've now sold over 250,000 square feet of space with a booking value of over 600 crores. So I think that's progressing well. Construction, of course, in that project is also going ahead at full pace.
With that, Firozsha, many thanks for joining us today and giving us that perspective. That's Firozsha Godrej talking about the numbers. By the way, metals are weak, L&T is weak, but it's essentially metals which are hogging the limelight on the downside at least. Jindal Steel, Tata Steel, Hindalco, Sesa Sterlite, all of these are down. Sandeep Wagne, your trading recommendations for the day?
Just sell in a Tata Communications, stop loss 291, target 261, and buy in a Glenmark Pharma, stop loss 619, target 663.
Not bad. Glenmark, Sandeep recommending it today. I think it was a recommendation yesterday as well, doing very well for itself. Thanks a lot for that, Sandeep. A couple of ideas there, short on Tatacom, long on Glenmark. Okay, Dilip Bhat is still with us. Dilip, we discussed your position on the markets with keeping the elections in mind. Now shift focus from the elections to a couple of happenings that have happened of late. One of them is telecom. Sandeep aptly brought it up. A couple of results came out, Bharti Idea. There have been tariff hikes that have happened. Arcom has had some tie-ups with 2 or 3 companies. RelJio is coming out with 4G. What's your call on telecom as large? Because if data plans come up and take center stage, then does it mean loss of voice revenue, and therefore is it a negative for the existing telcos?
Couple of things in that. I mean, you also highlighted a few of the points. One more thing which I would like to add over here is that the capital intensity of the business is only going up. The debt requirement, the fund requirement for the companies will go up as they gear themselves up for 4G and how they are going to challenge that. And second aspect, of course, that remains over here is whether the ARPU, which has shown some improvement whatsoever, whether they are on a very linear course to keep on improving. My own sense is at the moment no, because this new player also is a untested material, so we do not know what is the kind of impact it will have on the ARPU or even on the data. So that, having said that, I think I would still feel that all these telecom companies continue to be a defensive play because the downside risk appears to be a little more limited. But I'm not very sure whether on a proactive basis I'm looking for anything great upside from any of these telecom companies. So not on a proactive basis, but if I have to give a defense to the portfolio, I would look at Bharti and Idea.
What's your view on the auto space right now, Dilip? I mean, you know, we've had the April sales numbers come out. There's not been much traction. TVS Motors, of course, has shown good performance this month around. It may be a seasonally weak month for the sector, but even so, the kind of traction that was expected in terms of growth has not really come through so far.
Sure. I think, Tanvi, what we are looking at it is that this recovery cycle that what everybody is talking about, I think that is now getting hit at the discretionary spend level, which is what we are witnessing even in the automobile numbers. And be it, except for maybe Hero, I don't think that anybody else is really doing all that great. And possibly that drag may continue for another couple of months without any doubt, is what my call is, before it really bottoms out and then starts showing an uptick. So I would still try to play a little more safe in this automobile companies. I think within the space, I would be a little more careful. Tata Motors still looks interesting on an overall basis, and possibly I would look at Hero Motors, and maybe a little more on the downside, even Bajaj Auto.
How are you looking at the financial space right now, Dilip, between private banks, public sector banks, as well as the NBFCs? You know, a case in point being IDFC, where the trigger is the banking license. And my specific point over there is that in the earnings so far that have come by, there's been some bit of stability as far as PSU numbers are concerned. But on the private side, the argument that's been laid is that a lot of these banks may not be adhering to adequate provisioning in order to show higher profits. So, you know, it's not like their asset quality is as stable as it looks. From that perspective, and then put in the value at which most of these banks trade, what's your overall portfolio in the financial space looking like?
Tanvi, we all know that when this a surge of FI money that came in March, a lot of them got invested in the banking stocks. So Bank Nifty was really up, and a lot of them got invested in the Axis, the ICICI Bank, the SBI, and of course a fair bit, not fair bit, but at least a little bit in the state banks of India and the other PSUs also. So in that sense, this particular sector has really done pretty well in the last 2 months. But if you were to still see the core performance, whether it is NII growth, NIMs, the asset quality, I don't think that there is any comfort that we are looking at in any of these parameters, or maybe that may not happen in the next couple of quarters too. And the way the stocks have run up, it's simply no doubt that the prices are ahead of the fundamentals, and as what I said, the core parameters doesn't seem to be really improving in any significant way. So unless and until the overall economic climate really improves very dramatically, and then possibly the PSU banks may start looking good because the kind of bad assets that they have faced. And I think that worry on private sectors not doing adequate provisioning, I think that lurking fear possibly was there now for last 1 or 2 quarters, and possibly may continue, because now if something has to happen, some big ticket NPAs really have to happen, which can have a good contagion impact negatively on the banks. So probably that is still going to be say 1 or 2 quarters away, if at all that really happens. So my overall call in the banking is that I would still continue to be very selective away from the bigger ones. But ING Vaishya is something where in the mid-cap space that still looks pretty good. I would think that that's a stock which one should go for. I think maybe Axis Bank a little more so. I would think that in the private sector space looks pretty good, or maybe a UCO Bank here in the smaller PSU space.
Okay, some news bits on your screen. Supreme Court directs the MOEF to grant, I presume, environmental clearance to Mundra SEZ unit within 8 weeks. I'm presuming that there was some part of the unit which was not granted that environmental clearance, and now that's come in. That's quite good news for Adani Ports. The stock should react 185. On that one, it's down in the session today, as are most of the high beta names, or cyclical names really. But Adani Port and the Supreme Court directive coming in, for the environmental clearance to the SEZ unit within 8 weeks, so 2 months from now. Within 2 months from now, they should get that clearance. Not a bad piece of news out there for Adani Ports. We'll dwell more upon this one as well. It's got, I mean, there are other factors at play out here for how these stocks will behave over the course of the next 1 month. But yeah, this is positive news. However, what are dealing rooms saying about the session today? It's been rather quiet. The Nifty is in the red now, marginally at that, but the benchmark indices are in the red. Darshan and Yatin join us to tell us what their dealing room sources are telling them for today's session. Darshan, to you first. Good afternoon.
Good afternoon, Neeraj. Aurobindo Pharma is something that dealers are recommending. They have indicated that a lot of HNIs have actually taken positions into Aurobindo Pharma. They believe that this time around, like last time, results will be very, very good. But, you know, last time also what happened, there was a sell-off that happened post the numbers that actually came in, and most of the movement that came in was a few weeks ahead of the results. So this time also, ahead of the results, there seemed to be a lot of accumulation that is happening in Aurobindo Pharma. On the negative side, State Bank of India is something, an STVT strategy is something that dealers are recommending. On the basis of technical trends, they believe that the counter is looking rather weak. And finally, Jain Irrigation is something in which dealers have indicated that domestic institutional investors are buying into this counter.
Okay, thanks for that, Darshan. Yatin, come to you. What is it that you're picking from your sources?
Well, Tanveer, Maruti Suzuki as well as Just Dial, you know, these are the two stocks which are quite weak in trade today. Of course, Just Dial has corrected significantly from the recent highs. And both of these stocks, according to dealers, look quite weak as far as F&O data is concerned. And clearly, they are looking at a STBT opportunity here. They are expecting that the stocks will further weaken from here on. And hence, they are looking at some shorting opportunities here. Reliance Communications also, you know, we have seen the stock is below the 200 and 100-day moving average, taking support at the 50-day moving average. So this is one stock wherein dealers are expecting some kind of a hope, you know, of bounce back post the quarterly numbers. They're expecting the results this time would be good. And hence they are looking at buying opportunities here. And finally, Hindustan Sanitary Ware, HSIL, you know, this is one stock wherein dealers are looking to initiate some more long positions. A lot of HNIs have shown interest in trade today. Of course, you know, there have been talks that the new government will possibly emphasize more on some sanitation projects, and hence this is one stock that could be a direct beneficiary, good on the valuation. Of course, that has been a concern, but you know, that apart, dealers are still believing that there is value at this price.
11% up, was up close to 3% at the start of the trading day. HSIL now up close to 11%, not bad going there. By the way, Cera Sanitary Ware up close to 20% in the session today as well. So some of these companies are not in, maybe not the same businesses, but companies are doing okay for themselves, up close to 20% is Cera in the session today. 1154 on very high volumes, mind you, for Cera Sanitary Ware. Okay, some other pockets and some other stocks that I wanted to check with Dilip Bhat. Dilip, actually before I go to Dilip Bhat, just a word on IOC as well. I just saw a flash 2 or 3 minutes back about the price volume breakout there. And Ashwini, we've spoken about the OMCs today, I believe, but IOC up about 1%. Is that a stock that you would carry home along on?
So a lot of these OMCs have corrected from, you know, earlier levels, and I think IOC is now closer to its 50-day moving average. So any time a stock comes close to its 50-day moving average, the risk reward becomes extremely favorable, and chances are that if you can keep a stop around 260 in a good market, you could get those 288, 290 kind of levels back.
Watch out, risk reward favorable for an IOC, 267 currently. Probably could give you more rewards going ahead. Dilip, I wanted to ask you about the cement pack, and the reason I brought this up is because I was speaking to the management of Orient Cement yesterday, not the largest player, but he said that the cement companies, their EBITDA could go up considerably because there is a price hike in the offing, because the companies can't operate at the current price level. So there would be some bit of cost rationalization, but more importantly, a price hike of maybe 8 to 10% in the next 3 odd months, which will help the EBITDA significantly for cement companies at large. And he did mention that even the costs have bottomed out. Would you be tempted to buy into any of the cement companies?
Sure, cement companies look good. primarily because I think in the last 1 year we have seen the volumes really not picking up at all. So what is more important is that the volumes have to pick up. The price rise, I think the manufacturers are trying to increase, but I don't think that they have been too successful, because if the price rise is coming, it is coming at the expense of the volumes. So really both have to really move in sync at the moment, that the prices have to go up and even the volumes have to go up. And you know, the corollary to that could be that, okay, if the construction sector really revives, then possibly the consumption of cement also can really go up. But very important for this entire cement pack is that EBITDA to cash, I think the free cash that the companies generate seem to be pretty good and pretty solid, and that's one reason why this cement companies will always look good, and more so from the current level. So maybe I'm not too sure what's going to happen in the next 3 months, but from a little longer term perspective, I would factor both the things, that maybe there would be a price hike on a sustainable basis, there would be a volume improvement, and maybe you know, right now most of the cement companies are having something like 800 to 900 rupees operating profit per ton, so that can move up by about 100-150 rupees per ton over next 3 to 4 quarters. So that itself is a good news. So I would look at cement companies, and more so something like Shri Cement or something like ACC would be these two companies in particular look pretty good, and maybe something like an India Cement, just because to take some cement companies where the debt is high and possibly the cash flows could take care of the debts.
Okay, Dilip, just stay on. We would want one more investment idea from you, but we have to, it's 3:20, so we have to take in the closing strategies from our experts as well. So much more to speak about with Ashwini and Mitesh. We haven't done that too much today, but it's 3:20, so Mitesh, let's get in your closing strategies first. Your top closing strategy for the day or for the weekend, as the case may be.
I would suggest a BTSC on Lupin. I think we had a BTSC on Glenmark which worked out very well. I think Lupin is also breaking above the earlier highs of 1000 and recording its highest ever closing. So buy that one with a stop below 993 for targets of 1030. Even a position call to about targets of 1050 would be okay.
Okay, Ashwini, come to you. What is it that you'd recommend at this hour?
Well, I think the infra space is also getting weaker, so Larsen & Toubro you can sell with a stop around 1280, and maybe look for a target of 1220.
Ashwini, between a short on L&T and a long on IOC, which is the preferred trade?
Well, the preferred trade is probably going short on Larsen. The reason is that you know, the infra space is weak, the PSU sector is strong, so you're trying to short a weak sector and go long in a strong sector. In any case, if you have to go long, I think, you know, HCL Tech is much better long than even IOC.
Okay, great. Just stay on. Dilip, one final question to you before we let you go. But I think you mentioned a couple of cement names, but election results notwithstanding, it's been long that we've discussed an individual stock idea with you, and not a large cap idea. Maybe a mid cap idea, maybe a PSU idea, but one stock that you've looked at that you think fundamentally is poised to do very well over the course of the next couple of years. Which one would it be?
I think Aurobindo Pharma has moved up quite a bit, but I would still like to bet behind that at the moment, because on a broader basis, what we are looking at it is in FY15 they will report very broadly around 2,000 to 2,200 crores of operating, that is the EBITDA, and if it reports that EBITDA, it will be among the top 5 companies in terms of the EBITDA that any companies are reporting. But the valuations are still at 50% as compared to any of these other 5 companies in terms of the prices. So this particular company, Aurobindo, I think has a good potential to deliver a reasonable returns even from the current levels. And I think that's a stock which, if you take EBITDA to debt, or even if you take purely on a return on net worth basis, or generating a free cash of around 700 to 800 crores, from all this perspective, I think Aurobindo Pharma still looks a stock which one should buy and hold in the portfolio.
Okay, and I just want I have one more question on that. But while we're speaking of pharma, on expected lines, probably we heard about this yesterday as well or day before. But this is the global thing, of course. But an AstraZeneca board has rejected Pfizer's proposal. Now, this would probably have some impact on AstraZeneca India as well. But essentially, the big merger, the big proposal that people were talking about, AstraZeneca now saying that Pfizer's proposal is inadequate. So not entirely unexpected. They're saying that Pfizer's proposal undervalues the company, but this is big on the global pharma news, and I'm sure this will dominate headlines for most part of the day today as well. 7 minutes of trade left, so not so much for the Indian markets or for any of the listed stocks, but for maybe an AstraZeneca India, which is anyways not too very liquid. But yeah, a very big piece of news, and we'll of course probe this in greater detail as well. But just sticking to pharma, and Dilip, before I let you go, just a counter question on Aurobindo as well. I heard reports as well about the EBITDA, about the fact that they'll reduce their leverage quite a bit, and therefore that will have a big beta on their earnings. But you don't think that the run-up is too steep too soon, and maybe we'll see some consolidation or correction?
Sure, Neeraj, I started off by telling that I know that Aurobindo Pharma has run up quite a bit. But a lot of people were worried about the debt that the company was holding, which was almost about 3,000 to 3,200 crores. I think FY14, probably after the results, if I broadly have what I've understood and analyzed, the debt will come down to roughly around 2,800 to 3,000 crores, and I'm factoring in further debt reduction in the current year. So at an EBITDA level of around 2,000 crores and a debt of around 2,500 crores, I don't think that it is something which is a cause of concern. But I still believe that with that kind of EBITDA, I think we have seen whether it was Lupin, Dr. Reddy's, Sun, everybody got re-rated very significantly. So they have to deliver over next couple of quarters the numbers, which I think probably will pan out more or less. So I think if that really happens, the confidence will come in, and that possibly will set the further tone for re-rating.
Fair enough, Dilip. Thanks very much for joining us.